So how are the big whale investors and top analysts reacting to Tesla's Q1 report and recent events? You might be surprised, most of the big ones are staying the course and remaining bullish with high price targets. First, we have Tom Lee of Fundstrat, who sees the global tariff news as a buy the dip opportunity, one that will make millionaires. Second, Adam Jonas of Morgan Stanley saying the sentiment for Tesla has just bottomed after the Q1 report and good things are coming. Third, Dan Ives of Wedbush is remaining bullish on the long-term Tesla story, but he's demanding Elon Musk to get his act together. Fourth, Canaccord Genuity is keeping its buy rating and $404 price target and has got it right with their understanding that the so-called brand damage is minimal. On the other hand, we have Gene Munster of Deepwater, who has a ridiculous estimate of 80,000 deliveries lost due to Tesla's brand damage. We'll see who is right. We got Larry Goldberg joining us today. Larry, I always love hearing your opinions about these analysts and these big whale investors. Thank you for joining.
Thanks for having me here.
So one of the people that I personally like to follow is Tom Lee of Fundstrat. I do think that they have their kind of good sentiment of what's actually happening with the broader market. And of course, Tesla's now part of their ETF. It's actually been a while now, but they're talking a lot about it these days. So you got Tom Lee saying that this is the buy the dip opportunity after this kind of the news of the tariffs started to hit. He actually thinks that investors will be rewarded. He's saying buy as you can. So let's listen to what he's saying here.
We don't want investors to be panicking now or rage selling. We've had a very painful drawdown, and I know we're facing this huge uncertainty that may not end tomorrow, might last months. But like the other declines in stocks, like the one last year or the ones in 2022, the ones who could endure that short-term pain and took advantage of those declines are going to have good opportunities.
Yeah, what if things are different, though?
What do you think, Larry? How did you take what he's saying?
That's a strong call from a very strong analyst. I'm a little bit more cautious than he is. I don't think we've seen the end of the whole, tariff fracas. I think there is more uncertainty to come. I was very surprised at the approach this administration took. I had this exchange with Gary Black, who immediately this morning when the stocks opened lower, declared victory and said, "You see, Goldberg, I told you." Well, of course he's wrong. The voting machine has voted, but the weighing machine has still to, work its way in the market, and that's going to take time. I think his call that it's going to be a few months is probably on target. I think we face a few months of uncertainty. Uncertainty means that, the volatility is going to go up, prices are going to go down. I'm hoping not a lot of people are trying to buy leaps at the moment because the volatility levels right now is a little crazy. So we'll see. I have a note of caution. I'm waiting for a while before I actually dip back into the market. I'm not out of the market by any manner of means. I've kept the same exposure through all of this and will keep the same exposure, but I'm not buying.
Okay. Now, thank you for that, because it's important for us to understand you're thinking about this as well. So back to Tesla, that was the broader market, the tariff issues for Tesla. The Q1 report came out and the stock went up that day. Now, of course, the stock is down these days because of the tariff concern too. But surprisingly, people were caught off guard going, why did the stock goes up? Because I think most of the big whales, and they've already built in that they were expecting low Q1 numbers, but it's still very interesting, the sort of the reasons why. Let's go through each one of them. You got Morgan Stanley of Adam Jonas. He came out and saying that Tesla's sentiment, he thinks it could have actually bottomed after Tesla's Q1 delivery report. So we believe the challenges facing Tesla's current business are widely reported and well known, while the opportunities in the future business are potentially greatly underestimated. Larry, do you think that maybe this is right? That in general, the challenges that Tesla's facing with the Q1, it's the sentiment has already bottomed. This includes, by the way, any kind of potential brand damage.
I think that I'm aligned. I'm not sure it's bottomed. I am aligned. I think we're going to still have a rocky period as, Elon is aligned with the administration. The administration is now under the gun to prove their tariff formula is going to actually work for the country. I think sentiment from a political point of view during these periods of what I think are going to be uncertainty, months of uncertainty, is going to be pretty negative. And I think Tesla is going to suffer from that. But in general, I'm agreeing with the thesis that, we're at a low point, that the next couple of years are going to be very strong for Tesla, very strong for Tesla. And this is a good time to be in Tesla. That's just my view.
Okay. So I like what you just said there, Larry, that we don't know what's going to happen next. But I think the sentiment might have bottomed already because the market is already kind of preparing and understanding what's about to happen. One of the things is at some point, right, Elon's going to be leaving Doge. Now, this was the news that came out. It turned out to be false. But Rachel Bate of Politico reported that President Trump told his inner circle and members of his cabinet Elon will be stepping back in the coming weeks from his current role. Trump remains pleased with Musk and Doge, but both have decided in recent days that it'll soon be time for Musk to return to his businesses and take on a supporting role. This is what they reported. Senior administration officials said Musk is likely to retain an informal role as an advisor and continue to be an occasional face around the White House grounds. Another caution that anyone who thinks Musk is going to disappear entirely from Trump's orbit is fooling themselves. Okay, so I'm not going to go through what she wrote because it was quickly debunked by Caroline Leavitt, the press secretary for the administration. She said this scoop is garbage. Elon and President Trump have both publicly stated that Elon will depart from the public service as a special government employee when his incredible work at Doge is complete. Elon himself said, yeah, this is fake news. The point being that, yeah, so maybe he's not leaving right away, but he will. And it could happen as soon as several months. What's your thoughts on that?
His appointment must end at the end of May for statutory reasons. He's an advisor, an unpaid advisor. There's a limited amount of time he's allowed to be an unpaid advisor. So he was due to leave at the end of May. I think this reporter may have misconstrued something somebody said or did this purposely. I mean, these reporters have got very, very little honor amongst their thievery. I think end of May is the actual date. He may leave a little bit sooner to make sure that there's decent amount of time cushion there. But he's not going to be. He's not going to be no longer part of this administration. He's still going to cooperate and be consulted by this administration at many, many different levels. So we get the benefit of this reporter's incorrect reporting because the market says, oh, great, he's leaving, but he's not really leaving. But on the other hand, now the market is fully aware that his time at Doge is going to end anyway towards the end of May. And so there's somewhat of a relief. But all of this has been overshadowed by the whole, tariff debate. And so don't know that it matters much. I think Tesla is going to be affected by the tariffs. And so the tariff issue is by far the governing issue right now.
Okay, well said. So that's Morgan Stanley. They think that the sentiment for Tesla has bottomed after the Q1 report, but like you said, there's still all these things happening. Dan Ives of Wedbush Securities, he is a little bit concerned. He's out there saying that he thinks, after the Q1 results, he's saying that we remain firmly bullish on the long-term Tesla story, but Elon needs to get his act together or else, unfortunately, darker times are ahead for Tesla. He's been saying this a few times now. He's doubling down on that. He keeps his $550 price target, outperform rating, but he's saying autonomous remains the biggest transformation to the auto industry in modern day history. And in our view, Tesla will own the autonomous market in the US and globally with the launch of unsupervised FSD in Austin, kicking off the autonomous era at Tesla that we value at $1 trillion, alone on its sum of parts valuation. He's been saying this regularly. This is the new thing, though. He goes, but Elon needs to stop this political firestorm and balance being CEO of Tesla with Doge. The future is so bright, but this is a full-blown crisis Tesla is navigating now, and it's primarily self-inflicted. So you've got some of these analysts out there going, there's really little brand damage. Very few of them. Most of them is reacting this way. What do you think about his interpretation and analysis?
Well, I have immense respect for Dan Ives. His analysis is generally pretty much on target. I don't really align with his view. I mean, I try to play out the worst case situation in my mind, and that Elon remains strongly aligned with the administration and continues working in one way, shape, or other form with the administration. I think the brand damage that has been done amongst those people who really, are very angry with him because he's helped this administration come to power and stay in power. I don't think that's going to go away when Elon leaves the administration, or if Elon leaves the administration. I think it's built in. These people who are on that extreme wing of the party are going to remain on the extreme wing. I think there's been some value add because I think for the first time, people other than the coastal, cognoscenti have noticed the brand and are looking at the car. I've noticed it myself in driving and in speaking to people. I've had very little pushback, and I've had no damage done to my car. I need to be careful in saying that because it can happen any day now. But I've had a huge amount of interest in the Cybertruck and in my Model 3 wherever I've gone here in the South. And so I'm more balanced about it than Dan, but he is in the, he's in the hottest area of the heat against Elon. So I can see why he has this perspective. I don't necessarily align with him on it.
Yeah, in a conversation we had just recently, you brought up that there is brand damage. We don't know how much. We don't know how permanent. And you're saying that there's portions of it that will be. Then you said there's actually brand enhancement. That was very interesting.
Yeah. There is no doubt at all. Look, I travel through the South all the time. I've traveled through the Midwest. There is no doubt that the image of the brand in people's minds in the middle of the country has been enhanced quite dramatically. No doubt in my mind at all. Now the question is, do they turn into buyers of these relatively high value cars? The question is, do we have a lower cost version coming to market soon enough to take advantage of this very important advantage? And I'll tell you one other thing. I've been traveling the country for some time, and I've been, taking Uber cars. There are a huge number of Teslas in the Uber fleet, a huge number. And it's about to become, an even larger number. So I am not in the heat of the battle in New York City or in Chicago or in Los Angeles. So I don't see the crisis the way Dan may see the crisis.
Mm-hmm. Okay. And then, so I like the next one, which is Canaccord Genuity. I think that they actually are saying the right things, which is rare. We're seeing somebody saying this. This is what they're saying. So first of all, they've reiterated a buy rating, $404 price target on Tesla. And they said, okay, owie, right? Weak deliveries. In retrospect, we should have left our estimates at 331. Yes, we've been saying this. There should be 100,000 cars less. Tesla announced that. Not a shining moment for Tesla, but again, we don't think this is the quarter where one can accurately assess any potential Tesla brand damage impact from recent events. We're not saying there hasn't been any, but there is way too much going on to make a proper assessment as to how material it is and how permanent it will become. Okay. Now here you got the first time or a few times you got an institutional analyst actually referring to the changeover of the Model Ys, impacting all 4 factories that led to the loss of several weeks of production. They mention it, not to mention the potential loss of legacy Model Y demand in anticipation of the new improved Y. So then they say, in our strong opinion, the jury's still out. We need more time to properly evaluate this. He's referring to the brand damage. Demand for the Model Y appears to be strong, to quite strong, at least so far. Will it wane after enthusiasts get their cars? Maybe, but long lines in South Korea just to take a peek, and one of the best weeks in China the last 3 years in last March are good signs. And then they're talking about the future. So yeah, so I think that that's great. What do you think about their thoughts, right? Which is we don't know yet. We'll have to wait and see until we get the data. But they think it's going to be minimal.
Well, if we look at China numbers, it's quite clear that the Model Y is going to be a huge hit. Quite clear.
Yeah.
If you look at the traffic in the Tesla stores right now, you'll see that the Model Y is going to be a huge hit. On the other hand, we can't balance. We can't. It's unknowable for us how much quote brand damage unquote there really is, and so I'm absolutely aligned with this note. I think that's right, and we do know from Jeff's very accurate analysis that the numbers do not indicate brand damage, and so I'm aligned with this note. I'm probably more positive than this note, but they have to be a little cautious. They've got clients they have to answer to, so we'll see. I like this note better than I like Dan's note.
Exactly. Yeah, both Cern Basher and Jeff Lutz did a good analysis in saying that the 26,000 less deliveries than the production is actually right in line when you calculate, that they definitely had an inventory drawdown before the quarter started. So they did not build up inventory. They chose not to do that. And then that the last weeks when they finally got the at least in China, the factories going up in scale, it takes time. It takes a week or two to get them into customers' hands, and so that's why you get that little mismatch, and that's calculates exactly right. So there's in the calculations that these guys have made, there's minimal brand damage to that. They're selling everything that they can make, and just that they didn't produce enough because the factories are down. Yeah.
Yeah, and I think that points to this idea of the balance in terms of the brand damage. There's probably a very significant reduction of sales in California, but I think there's an increase of sales in the Midwest and in the South.
Yeah. Yeah. It's a lot going on, but it's really isn't as bad. Now, this is kind of, some analysts are saying this, retail analysts like us are saying this, but this is Gene Munster of Deepwater. He says that I estimate the brand damage to cost Tesla around 80,000 deliveries in the quarter. This is based on the assumption that Tesla would have grown at least in line with the overall EV market in March, which was up 10% year over year. I believe roughly 90% of the shortfall was due to brand-related issues, with the remaining 10% attributed to the Model Y refresh transition. Whoa, that is crazy. Jeff Lutz replied to him, Gene, if 80,000 for the brand, now Jeff's estimate is 100,000 loss for the Model Y changeover. There are actual facts behind that estimate, right? Several weeks of downtime. Each week, the Tesla makes 28,000 per week. It's closer to 100,000 that they lost. Are you saying Tesla could have delivered 520,000 in the quarter? Who do you agree with here, Larry?
I agree with Jeff. His numbers are very cogent and believable. I mean, there could be a 20 to 30,000 slippage or improvement. It wouldn't alarm me to know that the number, could move 20,000 one way or the other, to the positive side or to the negative side. That wouldn't surprise me at all, but I trust his numbers. And, this was made clear very early on in the quarter. So I don't understand it. The rate of recovery of sales in China, once the new Model Y started being delivered, is a very strong indicator that there's been no brand damage in China at all, as we would probably expect. But the fact that we're out of stock completely in the United States, and we're seeing, the pickup in sales, and we know when the Model Y started being produced in quantity because we observed it in the Texas factory. We didn't see the Fairmont factory, but we certainly observed it in the Texas factory. So I think he's closer to the target than, and Gene's numbers are just, they're plucked out of thin air. How he can make that assumption, I have no idea.
Okay. And then you were saying something about Norway. How does that give you any indication of what's happening?
Very interesting that Norway, everybody's crying, aha, Norway, because sales plummeted. Tesla sales plummeted in Norway, which is, famously liberal, Scandinavian country. But just in the last month, as Model Y started making their way to the new refreshed Model Y started making their way to the market, the number just screamed upwards. Now it's not at full flight yet. Obviously, they're still not getting full deliveries yet, but it was streaking upwards. And so this coming month and this coming quarter will be very telling, as long as Berlin are reaching full production rate in Norway. But the early results are very, very, very encouraging indeed.
Nice. Good info there. So, this quarter, everybody's focused on the production and delivery because of all these things that are happening, right? We have the transition of the Model Y. Then you have this Elon becoming part of the, the political hate that's happening now. What's going to happen in the next 3 months, 6 months? Is the narrative going to finally change and stop talking about, cars as much and start talking about autonomy? Or so much noise, it just continued to happen. Now there's tariffs. Now there's going to be something else, maybe a potential recession, maybe something else happens, a continuation of Elon participating politically. What's your estimate of what's going to happen?
Well, look, you're a veteran, as am I, of, funding secured.
Yeah.
And, we were told this was the end of days. You're a veteran, as am I, of the delivery, of production hell. We were told this was the end of days. Actually, I made a huge amount of money because when we were told it was production hell and was the end of days and Tesla had only days to live, I was watching, Bloomberg had this, they were counting VINs and they had this VIN counter, and I was watching it and listening to what they were saying on Bloomberg about Tesla dying, saying there's just this gigantic. So I went all in. I went in on a very, very large option play because I was convinced this was crazy.
Yeah.
And I made a lot of money in that time. So I think we're in the same boat right now. We have Gene Munster, calling the end of days. It's interesting how these guys are so colorblind. They're blue. They see only through these blue-colored glasses, and then we have other people who are seeing only through red-colored glasses. I think we have to evaluate carefully based upon the facts. And I think Jeff is absolutely on target, and if he and CERN are saying the same thing, then for me that's good enough. So yeah, I'm not aligned with everybody who's calling for the death of Tesla yet again.
That's great. So, but when do you think that the conversation will actually stop talking about cars anymore? You've got the energy numbers; they're starting to show up a little bit more. You've got autonomy in June. That's like in 2 months from now, or this is just going to continue for that's my feeling. I think that this car conversation is going to go on for the rest of this year, and autonomy won't be able to change that until maybe next year. Same with robots, unfortunately.
You're right, because we're not going to see numbers from the robotaxi fleet be meaningful at all in this year. And we're going to see robotaxis. We're going to hear about any events. There are going to be plenty of events. Oh, the car nearly crashed into me. Oh, I saw this car making a wrong turn on a wrong, blah, blah, blah. We're going to hear a lot of that. We're going to hear, there's going to be article after article how the whole experiment is failing. And we're not going to see any revenue from this of meaningful numbers. One thing we will do when the new version is finally out, I think we're going to see revenue recognition of a fairly large amount of that. That will happen, I think. So it's going to be a very mixed set of news. The other issue that everything turns on is when the new models and what are going to come out and what the new models really are. And there may be some disappointment, or there may be delay. it's unknowable at this point. I'm a little worried that it's just simply a stripped down Model Y and Model 3, in which case I think the market is going to be negative. So it's going to be choppy, very choppy for the coming year. And, everybody's going to still be on their political high horses. So I do think that we're in for turbulent times through the rest of this year and into mid next year. A lot turns on, what these new products are and how they come out, and, how the experiment goes in Austin, and, the rollout of the semi rollout is going to be huge. It's going to take time for it to hit the bottom line. And the energy revenue is going to grow quite dramatically starting in the third quarter. We're going to see in the third quarter some energy revenue dribble in, and in the fourth quarter it's going to hit quite big. So it's very turbulent times. It all depends on Elon turning up on the 22nd of the month,
April.
and giving us clear guidelines and positive guidelines on all these subjects.
Yeah, I completely agree with that. I think that, we are still a car company because if you look at the revenue, of course, as long-term investors, we don't see it as a car company. But if you look at it, it's car company, which means that you can't get these FSD or bots or any of that built in until you've got the car company, stabilized and growing again. And that may, like you said, turns on what they show up with the new vehicles, and maybe the current vehicles. I think the Model Y is going to show up. And actually, I think I'm the opposite of what everybody's saying. I think this year we're going to see a growth. I'm still on track with Elon saying that he's seeing a 20% growth, not just a 1.8 million, but maybe a 2 million number. I don't know if Cybertruck's going to make it, but maybe if they introduce the rear-wheel drive version of that, it all depends. Like you said, these two new vehicles that come out, and then but I think the Model Y is a big hit. So that's already one of the pluses. If these three things happen properly, I think that we have a chance of getting the 2 million growth that Elon had said back then about a quarter ago. So, and then when that's stabilized, then all these stories then built in, and that's when you'll see the stock rise. Otherwise, stock won't go up till next year.
There are so many unknowns. I mean, I could agree with you on some of what you say. I disagree with others, but there are so many unknowns. One thing we feel confident of, bulls, Tesla bulls, retail bulls, is the future of the humanoid bot, Optimus, and the full the robotaxi business in general, and the cybercab. We feel, and the energy. The area that we have some doubts in, that you've expressed confidence in, is the vehicle business. I think the vehicle business is as solid as a rock. I mean, we're still earning better than BMW. We're still selling as many cars as they are. I think we're just at the very base of it. We've got some incredible models coming, including the semi. So I think we're in very solid ground. I think people don't understand the vehicle business. It's a very tough business. I think we're in very good shape, though.
Great. Thank you so much, Larry. Love to hear your, one of the best retail analysts out there. And then you kind of react to these institutional analysts and what they're saying. Some of them are getting it right compared to what we're wanting, and some of them are way off base. Follow Larry on his X account at TSLA Larry. Thanks, everybody. Bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.